the Texas Blockchain Council, an industry association for Bitcoin miners, including Riot Platforms Inc., are suing the U.S. Department of Energy's Energy Information Administration over a mandatory survey on their power consumption. The inquiry is an unprecedented and illegal data collection demand against the industry, the group said in a statement dated February 22nd. Riot, one of the largest Bitcoin miners in the state, made $71 million last year, in part from pre-purchasing electricity for its operations and selling some of it back to the grid for a premium amid power shortages. Bitcoin miners accounted for as much as 2.3% of the nation's total power demand in 2023, and even the 0.6% low end of its range represents the same amount of electricity usage for Utah, EIA estimated in a February 1st report. The agency aims to better evaluate power consumption of the industry with the survey. The Department of Energy didn't immediately respond to a request for comment on the lawsuit. And while Bitcoin mining began in the U.S. a decade ago, the country saw an influx of mining companies from the world's previous mining hub, China, after the Chinese government banned the practice in 2021. A slew of mining companies went public in the U.S. and set up large-scale operations in energy-rich states such as Texas and Georgia. Collecting data from Bitcoin miners for their energy consumption has been difficult, since some of the data, including locations of the sites and electricity rates, could be considered as relatively proprietary by the miners. And then the TBC, alongside industry partners, use this as a direct assault on private businesses under the guise of an emergency, lacking legitimate grounds and demonstrating clear political bias. TBC, the senior project, put on